What's up traders, this is Mike from GYLD, and today I welcome you to our first video where we're gonna go over some technical analysis and some of the basic concepts. And today's topic is gonna be the market structure, which is one of the most important concepts in trading, and everybody needs to understand these concepts to trade successfully, right? So what is market structure, you might be asking? The market structure is basically the framework of any given market. This applies to all the markets, whether it be stocks, forex, currencies, cryptocurrencies, indexes, and so on and so forth, right? So there's generally two main types of structure, and that would be a trending market or a consolidation or range, in other words, right? So let's start with the range. The range, you can tell we are in a range when the price is not making any new lows or new highs, and it's essentially trading between two price points. Generally, as a rule of thumb, you can consider a price to be in a ranging condition when you get 4 touches, right? So in this example, we have 1 touch, we have 2nd touch, 3rd touch, and at this point with the 4th touch, we can confirm, or we have confirmed, that we are in a consolidation. Now, the way you want to trade ranges, if you decide to do so, is you want to be buying at the bottom of a range, aiming for the high, right? So essentially you would be looking to buy here and take your profits over here, or you would be looking to sell at the top and target the bottom. Now, looking at the higher time frame, this can help you which direction is more likely to take place. Let's say that on a higher time frame we're coming from a big downtrend, right? So this consolidation, we can assume that it's more likely to go lower. Overall, obviously we don't know when, but the likelihood of price going lower is higher than price going higher. So this is ranges. And then we have trending markets, which is probably some of the best trading conditions, since the market is heavily pointed towards one direction, and it's you have a clearer picture of where the market is likely headed. Therefore, you're eliminating any risk of taking the counter trend, which obviously you can do, but this is something a little bit more advanced, and it's advised that you focus on pro trend moves at first, right? So we have the uptrend, which is when price is making new highs. You can see higher high and higher lows, right? If you get this sequence of higher high, higher low, higher high, higher low, you can know that we are in an uptrend, and any buys are higher opportunity than the sells. Therefore, you want to be trying to catch the potential pullbacks, and if the pullback comes, then you would be waiting for some sort of setup that you use within your strategy, right? And since we know that the market is likely to go higher, we are in an uptrend, we just made a higher high, we can assume that this is likely to be a higher low. So this is where we want to position ourselves, right? If we get some break of structure on the lower time frame, maybe that's your strategy, and you can try to buy from over here. Then if we flip that, we have the downtrend, which is very much the same thing, just mirrored. So instead of higher highs and higher lows, we're getting a lower low, right? So if you get the sequence, lower low, lower high, this red line then annotates a break of structure. So if we break the structure, we break the previous low, we make a new lower low. Now we can look to take any shorts during the pullback. So in this example, I drew a pullback, so this is where you would want to position yourself for the short side. Now, for some of you who are advanced, obviously it is possible to use the higher time frame and counter trend trade, like trying to buy here, but this is very advanced and much riskier, so we do not recommend that for beginners, right? So this is the basic premise of market structure. And we can now take a look at some examples in real charts.
Alright you guys, so we're looking at the Nasdaq daily time frame,
And I like this example because we can see all the market stages. If we zoom out a little bit, we can take a look at this piece of price action, and overall we can see this movement. Now obviously if you go on a lower time frame, or if you want to dissect it, on a lower time frame the structure would look something like this. We have a high, excuse me, let's use this tool. So we have a move up, we have a higher low, we have some move up. Generally we don't want to count these tiny movements. When we're looking at highs and lows and pullbacks, we generally want to see something more complex, like right over here. You see it's a move up, move down, move down, move up, move down, move up, and it's a complex pullback, right? So if it's just like one or two small candles, we don't want to count that, since it's not really a reliable pullback. So as I was saying, overall we got this big move, making a new high, higher low, higher high, right? And that's on a higher time frame perspective. Obviously we could go lower and dissect the move into multiple moves, as the market structure is fractal, so it applies to every time frame, and there can be different structure on every time frame as well. Rule of thumb, you want to go with the higher time frame. You want to have one higher time frame that you're using for your overall direction, which could be the daily or the weekly. Daily is probably the best, since the weekly takes way too long and it's harder to build experience on such a higher time frame, right? So we have the uptrend over here, followed by a consolidation. You should know that it doesn't have to be perfect. It doesn't have to move between 2 points perfectly. It doesn't have to be exactly 2 points like this, but it's general 2 points, right? So we can see that the price over here, it's not really moving anywhere. We have a high, slight low, but overall we're pretty much moving in one place between two zones, right? And after that we break the previous higher low over here, and we shift the market structure to bearish, meaning a downtrend, which we still need to confirm with some sequence of lower lows and lower highs, which we get eventually. Now, whether you count this as pullback or not, that's kind of a personal preference, and it comes down to your experience. But as I was saying, this is not really complex. It's just a few candles up followed by a move down. So I wouldn't personally count that as a complex pullback, but if you do, that is fine. You know, you will never be right 100%, so it's also pretty subjective sometimes. But overall we got the move down, making a new low, and we got a lower high followed by further move down, right? So this example shows us all the stages, all the market structure stages or conditions, let's say. And let me remove all this quickly. And we can take a look at some lower time frame or higher time frame. That is fine. Let's take a look at the 4 hour. Let's scroll back somewhere random. And yeah, this is pretty nice uptrend. So let's say we're starting over here. At this point we can see that the price has been going up, right? And we got our high, we got our higher low, and after this break of structure, when we break the previous high, we create a new higher high over here. Let's put double H, right? So at this point we're looking for any pullbacks to look for long opportunities. Now this once again will be subjective, since this depends on what kind of plan or what kind of strategy you're using, but generally we have a confirmed uptrend, so you would be looking to buy at any pullbacks, like over here, or this one even better because at a new high. So here's the pullback. It's very quick. It's not a complex pullback, but it moves into some levels of support, and this could possibly be an opportunity to buy. So since this is an uptrend and we have the previous high set here, this would be your main target. You would be looking to target this area first, and what you could do is you could take out partials at this level and then hold out the rest to ride it for new highs, since we never really know when the trend is going to stop or where it's going to reverse, right? So we got a nice uptrend. Let's see if we have some consolidation. We have some small consolidations here. It's nothing really major. This could be major on a lower time frame, like the 1 minute or the 5 minute, but here on the 4 hour, where we're looking currently, it's just a small consolidation. It seems pretty much dead. The market wasn't really moving anywhere, but we get some expansion lower. And now if we were to look on a lower time frame, what do you think this would look like? So this piece of price action would look like this. It's a consolidation, right? And then this piece of price action over here is an expansion. So here, this is a good example how you can see multi-time frame analysis, because on this time frame, this whole piece is nothing but a pullback for the move higher, right? So from a higher time frame perspective, you would be looking for this pullback to be over, and then you want to buy higher. However, on the lower time frame, we got this consolidation, we have a break of structure, we have a new low relative to the lower time frame structure. So on a lower time frame, you could be pretty much looking to sell at levels of resistance and target the previous low. Now, excuse me if this is getting too messy, sorry, but I hope this is clear to you. So you can see that on a higher time frame we have one structure, on the lower time frame we have one structure. Generally, you want to look at the higher time frame structure, and when the lower time frame is going against that, you want to fade that. Basically, you want to see this downtrend on the lower time frame to end. We have lower lows, lower highs, lower lows, lower highs, and then we finally break the previous low, the lower high. And now the higher time frame is pointing towards an up move. It's in an uptrend, and the lower time frame is agreeing with the higher time frame since we broke this previous low. So any levels of support, like right here, we can look to buy again. See? And this is how you can use multi-time frame analysis. So in order to get higher probability trades, right? Once again, you could counter trend this. You could be looking for the shorts on lower time frame, but you should note that they are always lower probability, and overall they are riskier. There's lower probability and higher risk. Let's put it that way, right? Let's take a look at some downtrend example. This is still all uptrend, 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 uptrend. Not a real downtrend here, but this is a good example of a big consolidation. So we put the lines here where the high is. This is where the lows are generally. As I said, it doesn't have to be two perfect points. As you can see, the highs here are not perfect, but it's general points where price is hovering around. So you can see that price, it reversed from here. Then when it came back, it just briefly spent time above it slightly, and then it came back in right away, right? So on a higher time frame, this would be nothing but a spike, just like over here. So this is a very big consolidation, and you can see that the market has pretty much no direction. So when we are in conditions like this, it is best to just trade around the edges of the range, so the top and the bottom, right? So we get that, and here we can see a beautiful, beautiful downtrend. So let's start from over here, let's say. So initially, we are in an uptrend. We're making new highs, higher high, higher low, higher high, higher low, higher high, until we break the previous higher low, and we shift the structure to the downtrend. Excuse me. Let's clean this up. So after we break this point, we have our first lower high. So this is not 100% confirmed downtrend. Generally, you want to see at least the sequence. You want to see two lows or two highs. So anyways, we got the first lower low, and then we got a lower high. It came into some levels of resistance, and it broke lower. It broke the structure once again over here. So now we have a confirmed downtrend, and the same concepts apply as with the uptrend. We want to see some pullbacks. We want to see some counter trend structure on a lower time frame, and then it gets broken so we can sell again. So we have a small sequence of lower lows, lower highs. Now on this time frame, on this particular time frame, the 4 hour, this is not really proper structure. This is just mess pretty much, and I would still count it as part of this move because price never really stopped and pulled back. It just stopped slightly to spend time pretty much in consolidation, and it never really pulled back deeply. So I would consider this one move, and then we get a pullback. And on a lower time frame, this is where you want to be looking for some opportunities to short. Now, obviously, we don't know where the top is coming, so we don't know exactly when, but we got some other technical analysis to help us, right? Like this previous high around here. This is a nice level of support, resistance. And if price comes there, you get something like some break of structure on a lower time frame. This is an excellent opportunity to sell, right? Back to this little downtrend, back to this little sequence of lower lows, lower highs. If you went to the lower time frame, like the hourly, which let's see what the date is. It's the 31st of August. Let's find that real quick. March, February. Okay, we're getting close. September, August. All right, here's that very same sequence, and you can see that on the hourly, this is actually a pretty nice downtrend. So we have a pullback, which on the hourly is pretty complex. It's not deep, but you can see that it has a sequence of higher highs, higher lows relative to the time frame, right? Then we break the previous higher low here. We can come back into some levels of resistance, and we can target the previous lows. Once again, we get a pullback into levels of resistance, and we can target the previous low, and so on and so forth until the structure shifts. All right, so I believe that is everything for today, guys. I hope you found this helpful. If you did, we would appreciate any kind of feedback in the comments. And if there's any topic of price action or technical analysis that you would like us to discuss, please leave a comment and we can discuss it next time. So that is it, guys. Thank you for your attention, and I will see you next time. Cheers.